Hi everyone, welcome back to another episode of the Social Impact Journal. We're here recording in London at 1000 Visual Studio, and I'm here with Rishi Raithatha. He's a digital finance expert specialising in inclusive insurance and also in the mobile money space. And we're going to be talking about the rise of mobile money in the past 2 decades. Rishi, welcome to the show.
Thanks, Jack.
So I know you've worked really in so many different organisations. You've worked at the SCDO with the British government. You've worked for the World Bank. You've worked for a ton of organisations in the insurance sector. But I read something, and that was that you wanted to be a news anchor when you were younger. Is that true?
Yeah, you read right.
Yeah.
You absolutely read right. I think that's what I probably wanted to be at some stage. And I even remember an English class at school where we had to pretend to be a news anchor. And I think I nailed it when I realized that out of 20 kids, I was the only one who knew what a foreign correspondent was and where to use one in a fake news story. Well, not fake news in that sense, but a made-up news story. So I thought, yeah, this is really what I want to be. And I grew up in Africa, in Kenya, and I regularly watched BBC World, CNN. So, of course, you would look and see what newscasters were doing. So that felt like something that you could aspire to do, like a real job that you could at least try and train towards. But that was then. And of course, this is now. I'm not a newscaster.
So what happened then? Why not?
I think there was a point in time when I was at university where I was contemplating journalism against foreign affairs. And I decided to go down the foreign affairs route. So the intention was to become a diplomat. And I nearly succeeded. But I'm glad I didn't, because what I do now gives me a lot more fulfillment than I think it would have had I gone down the foreign affairs route. But really, I think thinking about what I wanted to do and where I am, it's just a series of bad decisions that have ultimately gone right at some stage. And at some point, you realize that you're good at something, or you enjoy something, or both maybe, and pursue that kind of path.
Yeah. I think bad decisions that went right might be good decisions, really, if you look back.
Without doubt. I think at this point in my life, I'd say I needed to see how tough some of the decisions were and what impact they'd have on me. I needed to struggle and suffer a little bit. But that's fine, because it forms you and makes you. Yeah. And I'm glad I went through that.
So you graduated from university,
yes,
and you went down the foreign affairs route. So what did that look like initially?
Well, I tried. So the first role I had was to work for the National Audit Office. I'd done an internship there, and that meant that I understood how the organization worked. I understood a little bit about the work. And really, I just considered that was a way to try and get into government and ultimately into the Foreign Office. And that nearly worked for me. So I did get into the Foreign Office. But having worked there for nearly a year, I felt that really wasn't what I wanted to do. I just didn't have the kind of skills and perhaps the mindset that you need to succeed in an environment like that. Yeah. So I made the painful decision of leaving. I didn't really have a job or anything to go to, but I knew I couldn't do it any longer. It's not a good feeling waking up knowing that this is really not what I want to do. Yeah. So I took some time out. I traveled a little bit, reflected on what I liked, and decided to enter the world of consulting. Got a job with Willis Towers Watson, doing some strategy work, which was fine. It was interesting because I learned a few things and experienced corporate life for the first time. Yep. Not for everyone, I should say. And then from there on, I moved to a small organization that had just been bought by McKinsey, and they specialized in something called insurance benchmarking. Did that for a couple of years, acquired some very, very good skills on how to do big data analysis, and then ultimately managed to find a job at the GSMA, where they had a program dedicated to promoting and supporting the use of mobile money in low and middle income countries.
So the GSMA, the Global Systems for Mobile Communications Authority.
You could say it's the trade association. So the GSM Association, the trade association of all mobile network operators worldwide, and any adjacent companies working in the space.
So promoting mobile money in low and middle income countries. So how would you define mobile money?
That's a great question. And I think this is really the kind of after dinner or during dinner question I get asked at various events. And people often mistake it for, oh, you work in mobile apps or mobile banking apps, and actually it's completely different to that. So mobile money is where you've got very basic mobile technology. If we think about what that is, it's about, if we could go back 20 years and look at the star hash and the digits that you type in to then get a menu up and then use certain numbers to define what action you wanted to take. So using that technology, which is called USSD, or 2G, I suppose, and using that to try and transfer money to friends or family or to a merchant, or even receive money, of course.
Okay. So in practice, so how would this work? So I have a basic mobile, not a smartphone, and same for you. So I can go here and send money. Is that with or without internet?
You don't need the internet.
No.
Actually, it runs on the GSM network that all of us use to this day to make calls. So you don't need the internet. You use my phone number as my account number. So you go into your mobile money menu. Well, you type in 3 digits with a star and a hash preceding and succeeding. There'd be a menu that would come up. You'd command it to send money. You'd put in my phone number, the balance. It would show you.
Okay.
And then you go from there. And there often is a small fee sometimes for a transaction like that.
So where did it start? Geographically and time-wise, where did mobile money start?
A lot of people think it started in Kenya. It's actually not the case. It started in the Philippines in 2001.
Okay.
However, it became popular in Kenya, especially on the back of the 2008 election that took place and the aftermath of that, or 2007 election, sorry. So this was popularized by a group of individuals working for Vodafone who piloted this with a grant from the UK government. And ultimately that proved to be a success, and it is what is now M-Pesa in Kenya, which is what a lot of people know as the sort of preeminent mobile money service.
Yeah. Awesome. So that's where it started, and where we are today, where has it grown in terms of, countries where this is being used, registered accounts?
Gosh, it's grown significantly. So according to last year's State of the Industry report on mobile money, which is something that I lead with a small team, we had 1.6 billion accounts.
Billion, okay.
Yeah. And that number has grown. So this year's State of the Industry report will be launched in a couple of months. But that number, I can assure you, has grown by at least 10%, probably more. And right now you find that even though mobile money is spread across 3 regions, namely Sub-Saharan Africa, Asia Pacific, a little bit in Latin America, and then, of course, Middle East and North Africa, the epicenter of mobile money remains very much in Africa. Okay. Now, just coming back to what you asked me, in terms of countries, you've got millions, nearly hundreds of millions of users in places like India, where you have payment service banks, Bangladesh, of course. Mobile money is extremely popular there. And then when you look at Africa, you've got a lot of growth in West Africa in particular. And this is something that the work that we've been doing at the GSMA has shed quite a lot of light on in the last couple of years.
Yeah. So if we look at being popularized, let's say in Kenya 2007 to 2008, what were the early challenges in terms of growth in Kenya and in surrounding countries?
I think the early challenges came. They focus on some of the same sort of challenges that, let's say, new entrants in new markets still face, which is there sufficient infrastructure? Nowadays, I think connectivity is a lot better. Just to give you an example, a few years ago, I was running a project which involved sending a team to northern Kenya, which is sparsely populated. And every day I was getting updates from the team leader via WhatsApp, including photos and videos of the fieldwork they were doing. So that's maybe less of an issue in some countries, but still a concern in many others. So infrastructure is a concern. Do you have a sufficient agent network? Agents are important to mobile money. And if you don't have an agent network, then you don't really have a good enough facility to cash money into the system or cash out. At the same time, do you have the right kind of regulatory environment in a country? So do the laws around e-money use allow you to launch that kind of service if you're not a bank, for instance, or do you have to partner with a bank? So these are still the same sort of issues that that impact how mobile money services can grow in countries where it might not have the same sort of foothold as others.
So let's talk about mobile money agents you mentioned. So they're so important for cash in, cash out. So how do you become an agent? Let's just talk about that. Let's say in Kenya. Let's use Kenya as an example. So there's agents in kind of every village, in every town. How do these people sign up to become an agent, and what is their role?
So in terms of I'll just come to their role first. I think their role is extremely important. They are the face of the mobile money service. So the moment you need to open a mobile money account, you would go to an agent, you'd take your ID, they would verify it against the Know Your Customer requirements, and they'd then be able to activate your mobile money account. You would have a SIM card. You don't need anything else. You just need to pass the Know Your Customer test. And they'd activate the account for you. You'd be able to cash in at the agent, so they'd take your money for you and convert it into e-money or digital money. If you needed to cash out, you'd do it there. If you've got any troubleshooting, you'd do it with the agent, at least the first point of call. If you're not sure how to use certain elements of the service, you would basically ask them for help. They'd be promoting various initiatives that the mobile money service would have launched. They'd be helping you with all sorts of questions you might have. So they play an extremely important role. They're often mistaken as just the point of putting money in and taking it out, but there's a lot more to them than just that.
And they take a commission then on...
They do.
On both sides of the coin?
They take a commission not from the customer, typically from the other side.
Okay. So just trying to understand this now. So if you're in let's say a rural village in Kenya, there's agents that you can cash in and cash out of. How much money, the float could they be having? And is that a security risk?
I couldn't really tell you off the top of my head about how much float they're carrying. We have had several reports and other insights papers written to document the challenges with float management, liquidity management. And that really is an issue in terms of keeping your agent network greased to make sure that it's functioning. Is it a security risk? Yes. Yeah, absolutely. There have been numerous instances where agents are targeted simply because people probably know that they have money, which makes them an easy target for a smash and grab. But over time, I think there have been better measures that agents are putting in place simply because it's putting an asset at risk.
Yeah, for sure. And they're operating in isolation. Agents with their booth, they're on their own usually.
It varies. I mean, I have been to small towns and villages across countries in East and West Africa where, yes, you might have one or two, but then you might have a row of them. And you might have one who is not exclusive to a single mobile money service. So they might be an agent for service X, service Y. It just depends on the nature of the agreement that the service has in place with them.
Okay. So at least that's a bit easier. So rural versus agent spread. You talked about there could be one in isolation versus a row. So is there still parts in some of the mobile money markets where you're in the most remote areas where people can't find an agent to cash in and cash out with?
It depends on the country. I remember being in rural Ghana, in the middle of absolutely nowhere. There's one small street, and then otherwise you've got lots of small houses with corrugated roofs. And yet you've got a row of agents, not just one, but you've got 3 or 4. And I remember that vividly because we were shooting a short video on how CoCo Farmers were using mobile money. And we had our pick of which agent to go and speak to. In fact, we went and spoke to all of them. But yeah, I think it just depends on the country. So I've seen in Ghana, it's generally fine depending on where you are. Of course, no problem in Kenya at all. Again, similar experience in Zambia and Rwanda, but it really just varies.
Interesting. So we talked there about security for the float, but if we talk about fraud in general for mobile money, both affecting the agent and the customer, because with this rise of digital financial services in countries where digital literacy may be quite low, how do you see fraud as a challenge to the sector?
I get daily newsletters from Google telling me what's going on in the mobile money space. something that a former boss of mine asked me to set up. And I never cancelled it. And the beauty of those newsletters is that I not only learn about things that are happening, let's say, at the macro level, companies launching products and so on and so forth, or any regulatory issues, but also hearing the sort of micro level stories, the fact that someone has been defrauded or there are concerns around mobile money security. And those are the ones I really enjoy reading, because that gives you a view on the reality of mobile money use. Now, I remember looking at this in a more structured way when I was working in mobile money policy and advocacy. And there are ways of looking at fraud. Of course, you've got fraud happening at the agent level or at the user level, where transactions are reversed or people are unfortunately conned into sending money to fraudsters. And that, by the way, happens in this country as well, surprisingly, or unsurprisingly rather. But then when you think about it from a systemic point of view, fraud, the incidences with fraud is likely to hurt the industry is where you have weaknesses within human resources or weaknesses within technology. You exploit those weaknesses, then you can commit big fraud. Or that's really what we that's what we found from the case studies that we've explored where fraud has actually happened. A really good example is from Uganda a few years ago, where an intermediary was able to find a technological gap, and they were able to use that to basically steal, I think, $2 or $3 million out of the system. It doesn't sound
from a telco. Wow.
It doesn't sound like that much.
Yeah.
But in the grand scheme of things, it's bad, because the reputational risk that you suffer is significant, and you end up having to deal with something bigger than just a $2 or $3 million loss.
You had some work and you were shooting with CoCo Farmers to see how they use mobile money. So maybe you can talk to me about that project and some of the impacts that mobile money really had on that value chain.
That was a fantastic project. I think that was the first time I actually got to go to the field. I'd spent all of my time looking at mobile money from behind a computer. As much as I enjoyed it, there was nothing like being with actual users, especially the kind of low-income users that mobile money services were really trying to target. We got the opportunity to speak to CoCo Farmers who lived 2 or 3 hours outside of Accra around how mobile money had transformed their use of financial services, because many of them would harvest cocoa, they would get paid in cash, and that presented various risks. Quite a few of them would be at risk of theft, because you know when harvest season takes place, and therefore you know that someone, as a farmer with cocoa, is probably flush with cash, so they were at risk. In other times, you'd find a few farmers would misbehave and spend all their money on things they shouldn't, such as alcohol, for instance. Actually, by their own admission, a couple of them mentioned that this gave them better control over their cash. And it meant that if they needed to help family members with emergency transactions or payments, that they actually could. So it was really gratifying to see that this technology and the various things around it was actually helping people in quite a positive way.
So we've talked a lot about transfers, but you're talking here around actually receiving their payments for the harvest, digitally. Is actually helping with their spending habits as well.
Absolutely.
What about other adjacent services that mobile money providers, are offering or people can do with mobile money? Saving, insurance. Are they available for users?
So the video in Ghana we shot, there's one farmer in particular I'll never forget. I've forgotten his name, but I'll never forget what he said, and I think anyone can go and watch it. It's on the GSMA's website and on YouTube. He talked about the fact that if someone tried to come and steal his money, they could take the phone, but that doesn't mean they've got access to the money, because there's a PIN code to enter. They could steal his motorbike, but they'd do that anyway, so at least the cash is safe. He talked about the fact that actually his spending habits had improved, but he also mentioned that he could pay for his kids' school fees and, as you asked, in terms of adjacent services, buy health insurance. So that was encouraging to hear, that it wasn't just for payments, but it could be used for insurance. A couple of others we spoke to were using mobile money for savings, irrespective of whether interest was being paid or not. The good thing is in Ghana, you actually do earn interest on your mobile money balances.
So it's the insurance you mentioned. So they would just press the 3 digits, go on to, and they can actually buy insurance there and then.
That's exactly it.
Yeah.
You have, I think Ghana is one of the first countries, or one of the earlier countries, where mobile-enabled insurance was pioneered. Both you and I know of Bima, of course, who are still there and still doing a good job there. And so that sort of direct-to-consumer model is probably what the farmer in question was using.
Awesome. So I know you co-authored a report with the GSMA in October last year, which explored the impact of mobile money, in economic growth and going beyond financial inclusion. So maybe you can. I think we've touched on that briefly there with the example you provided in Ghana, but maybe you can talk to me more about that in terms of how does the impact of using mobile money go beyond, purely financial inclusion.
Yeah, I think that report is really something that I'll always be proud about. And it was a team effort among a few of us. Yeah. And I'll be honest and say I probably put in the least amount of contribution. So I'm going to try not to take the team's credit. But the fact is that we, for years, have been talking about the fact that mobile money can make a positive social and economic impact. And of course, the social impacts were there to see. The economic impact, I think a few academics had tried to do studies in various countries, but no one had ever attempted doing this on a grand scale.
Yep.
No one had ever looked at what impact does mobile money have in the countries where there is a service. For us, the GSMA, we have the data going back 10 years, if not longer. Yep. And there are techniques that you can use to determine the impact of mobile money on GDP, on gross domestic product. So one of those methodologies was applied to the data. And from that, we discovered that over a 10-year period between 2013 and 2022, that mobile money had increased GDP in countries where there was a service by at least 1.5%. Okay. And we're talking about the equivalent of $600 billion, which is pretty cool when you think
Very
about
cool,
it. Yeah. You could argue and say, surely it should be contributing more. But my take here is that actually the impact is quantified.
Yep.
So we now know that this has a positive social impact. And for my colleagues who work in mobile money advocacy, this is a boon because it definitely demonstrates the positive externality that comes out of mobile money. What some of the findings from the report will tell you is that the more users you have, the better. The more those users are using certain transactions, we call them ecosystem transactions. So they're not the basic ones such as cashing in, cashing out, and transferring money.
Yep.
They're more about paying bills, paying merchants, making international remittance payments or receiving them. The more you make those types of transactions, the better it is. And of course, the more users you have on a service and the more active they are, the more network effects they're going to be.
For sure.
And then you benefit from that. And as a result of all that activity, you can see that there's a greater use of mobile money, which ultimately translates into higher fee growth and therefore an impact on GDP.
Awesome. So we'll make sure to include the link to that GSMA report and the documentary that you had in Ghana in the show notes for our listeners to watch and read. Looking ahead, where do you see the space going in, let's say, the next 5 years for mobile money? Circling back to fraud as a challenge, what do you think can be done, firstly? And then what are your predictions for the sector in the years to come?
That's a question we get asked all the time. What do you think is going to happen next? I think what we started seeing last year was that there was a bit of a slowdown in growth in the industry. COVID really accelerated the growth of the industry to the extent that we were able to determine, using forecasts prepared in 2019, comparing that to actual data in 2022, we found that COVID had added, or at least COVID as well as other things had added, over 300 million accounts, registered accounts, that is.
Wow.
So that's quite significant. But that was up until 2022. And since then, we've seen that there's been growth in the industry, but not at the rate that we used to see before. So there's a little bit more of a coalescence. The number of mobile money services went down for the first time last year. And that's not necessarily a bad thing. That's quite natural, where you can have a significant playing field, a large market, and then suddenly you might find smaller players not there anymore, or bigger players becoming a bit more dominant, or the dynamics just shifting based on users' behaviors, users' needs, and the way markets generally function. So we see that the industry is starting to mature as it becomes very much a mainstream financial service. And more, I think there's an emphasis on trying to get people to use apps that mobile money service providers are offering, because the user experience on that is significantly better than what you would get if you continue to use the USSD menu.
Yeah. Interesting, very, very interesting. I think our listeners are going to really enjoy this. This is the first time we've really focused on mobile money, in detail. I think we've covered it in some other financial inclusion episodes briefly. You mentioned so many different countries that you've been to for projects, for going to the field. So you must have some interesting travel stories, or projects that you have fond memories of.
This is the question where I really wasn't sure which answer to give you, because there are so many, and I'm extremely fortunate to have had that kind of experience in my life. Jack, I grew up in Kenya, in East Africa, and I loved growing up there. It really has had a massive impact on me, and I think it's only because of that experience of living there that I've ended up in this kind of career. One of the best experiences I had, the Ghana video was great, don't get me wrong, but one of the best experiences I had was to shoot a similar video in Kenya. And I'd done the Ghana video, so I knew what I needed to do. Yeah. So we went and did something similar in Kenya, where we looked at how dairy farmers, and we're talking about a one-person operation with a couple of cows and a bit of land, how dairy farmers were using mobile money to digitalize their records as well as receive digital payments. So we went to Kenya, we shot that. I didn't need a translator this time because I speak the language. So that was fantastic for me. Yeah. And I remember one lady, her name was Esther. And again, you can find her in one of the in the videos we shot. She was only happy to be interviewed if we milked her cow. So I don't think the photos or the footage of me milking a cow made it to the video, but there is a photo of me doing that that exists somewhere in social media. And I think I need to find it now. I need to find it. It's on my Instagram. I was very proud of that because my Kenyan nickname is equivalent to farmer. Yeah. Simply because it rhymes with my surname. Right, so my surname is Raithatha. My Kenyan nickname is Waithaka. Okay. And so when I introduced myself as a Waithaka to Esther, she said, okay, well, if that's who you are, you're going to milk the cow. Otherwise, I'm not shooting. And I thought, fine, let's do it then. Awesome. So that was the first time you did it before? Yes. Yeah, and it's actually really difficult. I can imagine. It's not easy. But yes, somewhere at home, I'm sure I've got a pair of Converse shoes with milk stains on them. Yeah, I recorded an episode with a guy called Ness in Kampala. He's a filmmaker, and we were talking about the lengths sometimes you have to go to capture impact stories. And he told me some really interesting stories, but it's similar. You met Esther, and sometimes you have to do things, so that she was able to record. So. In the actual video you then shot with Esther, you mentioned around digitalizing the records, which I'd imagine is so important for her if she wants to access credit. Yeah. What happened there with? So there are two parts to it. So the first is that the records are important to the farmer because you can have spillages and leakages and even theft that happens along the way. Somebody comes to pick up the milk, they take it to the cooperative. The cooperative accumulates the milk and collects it from all these different farms around them, and then it's taken to the dairy. Now, in between getting from the farmer to the dairy, milk can go lost, things can go wrong, paper records can go missing. So having that sort of record means that there's better trust within that value chain. But equally, the idea that was being trialed at the time by that company was to use the data on how much milk was being produced as collateral for the farmers to then ultimately be able to take out credit. I wish I could tell you how that might have progressed. But COVID hit, and I have little idea what happened since then.
Yeah.
But you asked me about mobile money use cases in rural situations, and we went with Esther to shoot how she would transact and where she would transact, and she mentioned that she would buy cooking fat with mobile money.
Wow!
So there you go.
Yeah, awesome. Rishi, it's been really good to have you on the show and talk all things mobile money. So you now have your own social impact journal.
Thank you very much.
A question I ask to all of my guests: if you can use one page in that book to share some of the experiences and the wisdom that you have for someone out there that is now, building mobile money solutions or any digital finance solutions for consumers in lower middle income countries, what would you say to them when in that design process?
It's a very simple message, really. Always think of what the customer needs, and how whatever you're designing might be similar to what they already have. Because if you can do that, then you're really lowering the barrier to entry. If you're trying to design a savings or insurance product, ask yourself if they're doing something similar that's analog, that requires using cash. And then think about how the digital solution emulates that. And I would say if you can lower the barrier to entry, then that's step one cleared.
Yeah. Great advice. Rishi, thanks so much for coming on the show.
Thanks, Jack. Real pleasure to be here.
Thank you so much for watching this episode with Rishi, where we covered all things mobile money. If you did enjoy the episode, please do share it with your colleagues and friends, and make sure to follow us on all of our social media channels. Episodes are released every Monday at 9 a.m. GMT, so see you next week.